When you look at an investment-linked policy, this is what you see. Bank Negara requires to give a sales illustration for investment-linked products. If you look at this, you're like, wow, there's a lot of tables and columns, and it's quite complex. And the reason why it's complex because there's a mixture between, some is for insurance and some is for your investments. And then sometimes your investments pay for your insurance. And then there's investment charge, insurance charge. So it becomes really, really complex. But the craziest thing about this is that if you look at that bit I've circled here, allocated premium. Unallocated premium means things that don't go towards your funds. These are things that are paid to distributors, commissions that are paid to life insurance agents, even to Life. To be fair, we are also agents to a certain extent. And look at it. Out of, say, for example, you pay 300 every month, it's 3,600 every year. 59% to 60% of it in the first year is given to intermediaries. And that's crazy. Can you imagine if you wanted to buy an investment and someone says to you, to buy this unit trust, your first year contributions, we're going to take 60% of it as intermediary charge. That's nuts. Even in the old days of unit trust agents, you get 5% sales charge. Now it's going down to 0. Why should you pay 60% or what you intend to invest for intermediaries? And that's nuts. That means it kills your returns completely. And this goes on to 60% at the beginning, and then it goes down 6 years. If you would look at investment-linked plans, I just use that table and try to simplify it and to say, okay, how much is put into investments is the blue. How much is put into insurance is the red. And how much are you paying to intermediaries in terms of commissions and fees is the yellow. And you look at the proportion of that. That means out of 3,600 that you put in every month, more than 2,000 is going to the yellow for the first 2 years, and about 800 that are going to third and fourth years, and etc. At the blue line, meaning your investment part actually starts off very low because you're allocating a lot of this stuff towards intermediary costs. The insurance is red. The insurance is always there. You need the insurance, but your investment part actually is very low in the beginning. If you were to do all this and say, all right, and after paying all the commissions and all that, if you use an investment link plan for something like a 3,600 per year type of policy, after 10 years, pure absolute amounts, you probably put away about 16,500. And if you add an 8% return on those, you probably end up with 24,000 as your, what insurance companies call cash value. Let's change the motto to buy term, buy the most cost efficient thing, buy term, and invest the rest. What would the numbers look like? These are the numbers. Look at the blue. The blue in the first 6 years is definitely higher than the one for investment link, simply because your intermediary costs are lower. All you're paying is just fees or commissions to intermediaries that are involved in the insurance part. The investment part, you're paying 0 because you're investing it yourself. And these days, with companies like robo-advisors and all that, actually, you know what the costs are? How much does it cost to open up an account with robo-advisors? 0. How much does it cost for them to manage your money? 0.6, 0.8% per annum. Once you pay for your insurance and intermediary fees for insurance, basically everything else goes into investment. So much so that absolute amounts that you sock away for your investments is about 20,000 after 10 years. If we assume performs the same way as the unit trust you buy under investment linked plan, rate of returns like 8%, that means that will increase to 30,000. Difference is about 6,000 or 4,000 depending on how you want to look at it. But all this is really made up of that first 6 years where you are actually putting more towards your investment rather than paying intermediary expenses. This is the real crux of it all. Out of every dollar that you pay, when you're putting it towards your investment, in the first 2 years, 60% of that is being allocated towards intermediary costs. And really, we don't want that. If you use a motto, buy term and invest the rest, essentially anything you put towards your investment, you should be able to get 100% of whatever you put into investment if you were to invest it independently.